Hello, my friend. How are you? I'm so happy to see you again. I will explain to you the trading, the possibilities of trading or the opportunity that are present today in a New York session, which is very limited, but it is also an opportunity and should explain it. When we see that the price is moving sideways on as these candles on New York session, that means that the price is not surprising today. So how we can trading today. As you can see on daily time frame, you should know that the key levels, the key levels is the high of the previous day and the low of the previous day. This is the high of the previous day and this is the low of the previous day. This is the first thing. When you change it to when we detect these high levels, high of the day, okay, and this is the law of the day on the bottom. Yes, when then we should look for the buys of the market, and we should look for the possibilities of trading. As you can see that the price is moving sideways on these candles, and this is inverted fair value gap, and this is fair value gap. So there are two fair value gap. When you see two fair value gap, that means all features may be presented in this area, especially if there is a swing high or double top before it. So this is a swing high, this is represented the liquidity area, this is represented the liquidity area, and behind this liquidity area, which should be a sweep, there was a PD array, which is inverted fair value gap and fair value gap. When you see fair value gap coalesce with fair value gap, with inverted value gap, or one followed by the others, that means there was multiple things that detect that should be detected, and you think that it is present. These things is the order block. As you can see, this is an inverted, this is breaker block. This is candle. This candle is a breaker block. As you can see, the price moving upward and then moving down and close below the high of the day and then moving down, making a break of structure, a break of structure here. So this is a breaker block. This is associated with the also present in this area. This is a breaker block. This candle, this candle, okay. This candle is a breaker block, okay, and this candle it represents order block. This uh, bullish candle is a represent order block, but this order block is calculated from the body, not from the wick. Why? Because it doesn't coalesce with fair value gap. There is no fair value gap here. So when you see uh, inverted fair value gap coalesce with fair value gap, you should look for breaker block and also look for the order block also present in this area. Sweep from the above, and then there is a liquidity behind them that the market should sweep it. So you can sell in this area, you can sell this area. I will show you how and where, we put the stop loss. The stop loss is already behind these two fair value gap, behind these two fair value gap, okay. And the target is the BD array, the other BD array. This is the other BD array, the target. As you can see, it is beautiful if you sell from this area and take the profit in this area. Here we have a breaker block. As you can see, this is a breaker block. When we change it to H2, this is a breaker block, but it doesn't coalesce with this breaker block. This is a breaker block. You can see it. This is a breaker block. So our target is near here. So the market will move from PD array to other PD array. This is a breaker block. Sweep from below, market structure shift from the above, and then return to this area. So this is a breaker block. So the market moving from this PD array to this PD array. That's what I want to tell about you. I didn't try this early because I'm coming late, but there was also an opportunity to enter in the market and moving from the BD array from above to the BD array from below. And you should know that there was when you look for an fair value gap and inverted fair value gap coalesce together, there was already a breaker block and there was also an order block that support our idea to move the market. This is the principle. And also the other principle, the stop loss is put it behind the two fair value gap. That's our what I want to say it today. Thank you very much and bye bye.